Signs are that the recovery is losing momentum, and that will make it more difficult to get that debt burden down. Andrew Harker, Markit Economics. Spain's unemployment data was higher than anticipated. What does this mean for the euro?
Well, I'd be a bit reluctant to read too much into the monthly labour market numbers for Spain. Particularly this latest release, I think, was quite affected by the start of the summer season. And if you look at the underlying trend in where unemployment's going in Spain, it is coming down, but the rate's not really coming down as quickly as we might have hoped, I don't think. After all, it's still above 20%, which is really high. If we look at sort of the manufacturing PMI data that we released yesterday, that showed that employment continued to rise in May, as it has been doing now for about 2.5 years. So that's obviously a good sign, but the rate of job creation has been slowing in recent months, and the latest rise was the weakest in 5 months. So seeing some sort of slowdown there. And that's sort of consistent with what we've seen in other parts of the survey. Manufacturing output rose at a weaker pace in May, and new orders actually increased at the slowest pace in 2.5 years. So there has been a general slowdown in the manufacturing sector, at least, which suggests that maybe the labour market won't be as improving as quickly as it was certainly last year. And that sort of gives a sort of negative sign towards the whole economy, really, maybe a sign of slowdown in the recovery, and that's obviously a problem for the euro area if one of the big four economies is losing its growth momentum at this stage.
Figures have shown public debt in Spain is worth more than the economy. How can they reduce this figure?
Well, I think there's kind of two factors at play here. One is obviously the public finances in terms of the deficit, and Spain's been overshooting its deficit targets from the European Commission for a number of years now, and I think there doesn't seem much prospect that it's going to be able to meet its target for this year, given that it hasn't had a government in place since the end of 2015. The other side of things is obviously economic growth. That's a great way to get the debt to GDP ratio down, is to see strong economic growth. And to be fair, that has been the case in recent quarters, certainly last year and the first quarter of this year. But as I said, the PMI data in the past couple of months and with the manufacturing release yesterday has shown signs of a slowdown. So that's obviously going to be a worry, not only in that the economy doesn't grow as quickly, but if maybe unemployment stops falling, you're going to have stabilisers coming into place from the government. It's going to have to increase its spending. So, as always in these sort of things, the performance of the economy is key in terms of reducing that debt to GDP ratio. And the signs are that maybe the recovery is losing momentum, and that's obviously going to make it more and more difficult to get that debt burden down.
Spain will hold a general election at the end of the month after failing to form a government in December. What will this mean for the economy?
Well, yeah, as you say, they failed to form a government after the December election, and so not much has really changed in the past 6 months or so politically, I don't think. What we've seen from the reports we've had from the panel members that we've been talking, the companies that we've been talking to, is that the sort of political uncertainty has been having an impact on decision making, whether that's with their companies' customers, less or more reluctant to commit to new business, or whether it's the companies themselves not sure about investment decisions, whether to take on staff, for example. Thinking about the upcoming election, I don't really see any signs that the result is going to be vastly different from the election back in December.
Thank you for your time today, Andrew. We will have to wait until the end of the month for the results from the election. That's all from me today. Don't forget to check our website out for the latest business news. But until then, goodbye.